A very warm welcome to one and all. I'm Jahnavi Bodhe, a student from the Department of Professional Studies at Christ University. In conversation for Cognito Talks, we have with us today the co-founder of Truebeacon and the Chief Investment Officer of Zerodha, Mr. Nikhil Kamath. Nikhil Kamath started trading at a tender age of 17 when most of his peers would be dreaming of landing themselves into the best universities in India and abroad. At the age of 19, along with his elder brother Nitin Kamath, he co-founded the Kamath Associates to manage money for high net worth individuals in the public market space. The brothers then started Zerodha in 2009, which completely disrupted the stockbroking ecosystem in India with a free equity delivery and a flat fee for intertrade trades. Zerodha today has 1 million active users, facilitating over $3 billion uh, of daily and a daily turnover of close to $10 billion. Zerodha is entirely bootstrapped and today commands a valuation in excess of $1 billion. In August 2019, Nikhil co-founded Truebeacon, a Category 3 alternative investment fund that manages money for high net worth clients. Interviewers for today are Aakansh Kothari and Dipesh Saboo. Dipesh is an alumnus of BPS Christ University, and Aakansh is currently pursuing BCom International Finance in BPS. A heartfelt welcome to you, sir, and thank you so much for joining us today here at Cognito Talks. We look forward to an insightful session.
Thank you, Janvi.
Good morning, sir. Aakansh here. So, first question first. So, at age 17, when most of your peers might be dreaming of studying and doing various other things, you decided to quit formal education initially to pursue chess and later trading. And at that time, the larger Indian public was averse to investing in the stock market. So, what was your entire thought process then, and why did you decide to take this leap?
Well, I think to start off with, I wasn't very good at studies. It wouldn't have gotten me anywhere if I had pursued down that path. So I think fair disclosure. But I think the innate need to kind of like become independent, start earning money, happened a little bit sooner for me than it would for most others. So the drive innately is the same for all of us, right? Like you want to like have more than your peer group, you want to earn money, you want to like do things on your own. So much of the same. All of these were driving factors. And luckily for me, things organically worked out. I started in an industry which was at some kind of an inflection point. Stockbroking 12, 13 years ago was not very cool in India. So when we started stockbroking, we were kind of filling a vacuum. You know, if we had to replicate the success of Zerodha today, it probably would not have worked out if we did exactly the same things. But back in the day, there was a vacuum, there was room to kind of like build something here, and we got lucky being in the right place at the right time.
So Dipesh here. So the one thing we know is Zerodha started off at a time when startup ecosystem in India was still at a very initial phase. And looking at today, what do you feel has changed over the past decade or so in the startup ecosystem in India?
I think people have kind of like, let me think of a nicer way of framing this, but there has been a lot more money which has come into the startup ecosystem. Back in the day, if you had to get funding or borrow money from a bank, was exponentially harder than it is today. I think liquidity is available across the world as of now, and a lot of that is finding its way into equity markets. But back in the day, I think the big differentiation was people still did not A, recognize the India story, and B, in terms of liquidity, the amount of money that was available was probably 100th of what is available today.
So just to follow up,
Hmm.
Zerodha started at a time when, like, what was the objective behind and the aim behind Zerodha? And do you feel like what you guys had imagined of what Zerodha will be? Has it been there? And what was something that you guys never thought of? And it has become a reality now for you?
Our use case was very simple. We were traders and we were managing money for a living, like Janvi mentioned earlier in Kamath Associates. Uh, Back then, say you had X amount of capital and you wanted to make Y amount of profit, the biggest deterrent was broking fees. People would charge as much as 0.5%. If you were an active trader, it was very hard to remain profitable after paying the fees that you had to pay back then. The intention with starting Zerodha was to kind of like get rid of that fee, be more profitable as a trader. We never kind of imagined it to grow into this large retail player in a way, but we got a broking license because we wanted to save the cost that we were paying. And the one big differentiator in Zerodha is the fact that we have never done any marketing or we have not put out any ads. We only rely on word of mouth to grow. And the one thing we realized very early is the big differentiation for us would have to be transparency. Brokers traditionally have a bad rep. They are known to be people, who have hidden charges and they kind of like uh, they don't operate in as transparent a manner as they should. And I think that was at the focus at the very beginning, and that seems to be what has worked for Zerodha over the years.
Okay. So, coming to the point of the customer first approach, which both Truebeacon and Zerodha have at its core, with Truebeacon disrupting the asset management model completely by waiving of the management fees, and Zerodha, on the other hand, zero delivery charges for equity and like intraday charges, flat fee. So, what was the core of the customer centric approach? Like, what has it helped Zerodha and Truebeacon come into picture?
Let me pick one of the two examples. Let's take Truebeacon because it's newer and it's still a startup in a true sense. Truebeacon is catering to a very niche audience. It's for HNIs and ultra HNIs only. But they have up until now lived in an ecosystem where, say, for example, I'm a rich guy in Delhi and I have $2 million that I want to invest this year. Typically, I would go to my private bank. Uh, I will go to, say, a Standard Chartered or a Barclays or whoever and tell them I want to invest this money into some kind of a fund, equity, or whatever. So traditionally, a Stancy would charge you 2% to find you a fund manager. Then you find a fund manager. The fund manager will then charge you a setup cost to set up your account, which is 0.5% to 1%. Then he'll charge you 2% a year to manage your money if you make money or if you lose money. And then there are many arbitrary, basic nonsense like, you can't take out your money for 3 years. If you want it early, you have to pay an exit fee. We will tell you what your NAV is once every month and all of that. So these were problems I faced when I was trying to allocate my personal money. And for the lack of a great asset manager out there, we started Truebeacon and we said we'll waive off all this. We'll not have any middlemen. We won't have distributors. There will be no setup cost. We will be totally open-ended. You can add money when you want, take out money when you want. And we decided not to have the management fee, that 2% a year. And in our endeavor to be totally client aligned, we said you put in 100, all 100 goes into the fund, unlike a 96 or 97 in other funds because of the fees. And if the 100 becomes 110 at the end of the year, you pay 10% of that as a fee, or you pay one as a fee. And people seem to have really liked the fact that A, we are transparent with daily reporting and all of that, but also the fact that we don't have any revenue as a company if the end user does not end up making money. So that has been the differentiator for Truebeacon. Very early days still. We're on the cusp of finishing 2 years as I speak. But I guess the trajectory has been great so far. It's growing 5x a year. hopefully that scales into becoming a formidable entity.
So one last question from my end.
Yeah.
During this entire pandemic, we have seen that a lot of startups are now getting into public issues. Like a
Mhm.
lot of startups are now getting into IPOs and like raising funds from the public market space. What's your take on it? Like, how do you project it going ahead?
Well, personally, if you ask me, I think most of the startups out there are deluded. I think the valuations that they're quoting it are ridiculous, including us. I don't think it makes sense. Uh, People have forgotten that the point of a business at the very core is to turn a profit. Half the startups which you're hearing, 5 billion, 10 billion valuations are not even making a profit. Uh, the VC world and the PE world, where cost of capital might be near zero for companies which can borrow in Japan, can borrow in other countries at 1%, half a percent, these valuations in some way can be justified. I don't think the same logic applies to the retail public of India, right? Like you can still go to a bank, put your money in a FD, get 5, 6%, or if you have to go borrow, you pay 8, 9, 10, 11% in India. So I do not think these startups, which have done so well in the private ecosystem, in the valuation lens, will necessarily do equally well when they come to the stock markets. I think it will be a reality check. I think people will be unwilling to pay 50, 100 times, multiples for a company which is not profitable yet. But those are my 2 cents. That's what I believe in. I think only time will tell.
Thank you so much.
So ever since the markets have crashed last March, and then we've seen a significant rise in the retail participation in the equity markets in specific, and because of that, your platform has seen a significant rise in the number of users month after month. So how do you assess this situation, and going forward, do you think the growth trajectory will continue, or will see a decline somewhere, or it'll start to stagnate? But also to consider that there's only close to 2 to 5% of the Indian population directly or indirectly into the capital market. So how do you assess this situation?
I wouldn't even say it's 2%. It's probably more like 1.5%. There are many replicated demat accounts and such, which kind of skew that number. But I think it would be foolish to expect the same amount of growth that we witnessed last year, because last year was not normal circumstance, right? People had so much time at hand, markets rallied like crazy, and it was in the news and all of that. I think we'll see some amount of stabilization in terms of the pace at which we grew last year. But from a long-term perspective, from a 10-year or 20-year perspective, the opportunity still is there because of that 1.5% I told you about. Market participation around equity markets in India is really low. That number in the West, in America, for instance, will be way higher than 50, 60%. The government of our country really likes for the people of this country to allocate money to equity markets. It's easily taxable. It allows for the retail of the country to participate in the India growth story. Unlike gold, which we don't have any of and we have to import, or unlike real estate, where the government doesn't have a great taxing mechanism every year, they would much rather prefer for people to put their money in financial securities. So I think that trend will grow and that trend will exponentially spike, and there will be inflection at a certain point. When that will be is hard to call, but as far as we are concerned as an entity, I think it would be fair to assume that if we witnessed 100% growth last year, we might witness 40, 50% growth this year. They're all still mind-boggling numbers. I think the industry is growing at such a pace that it's structurally changing. People have to reinvent what they're doing ever so often and try to be as competitive as they can.
So the next follow-up question to this is, what do you make of the markets and the economy now, considering that the last 12 to 14 months have seen a crash and a rally of almost 100%? So if, for example, someone with a long-term perspective uh, wants to park some amount of their capital, so how do you assess that is it the right time to invest now, and how do they invest? Should they wait, or have the markets bottomed out? So how do you assess the current situation?
Well, I think markets are expensive today. Uh, I think markets are expensive compared to any time in the history of our markets. At a 40, at a close to 40 multiple of earnings, forward earnings, uh, it would be fair to say that everything is a bit inflated right now, and to expect a correction would not be incorrect. I think at about 20 to 23, 24 times forward earnings is a fair place for equity markets to sit. So I'm saying, as a combination of all the large companies in India, if they're earning 100 rupees today, to say that the value should be 2,200, 2,300 rupees for these companies is fair, because you can look into the future, I mean, a little bit, and have some kind of a model that arrives at that number. At 40, it is expensive. So personally, whenever people ask me, should I be buying equity now, and questions like that, I always recommend that don't do it without a hedge, don't do it without diversification, don't do it without enough risk cover at hand, because markets are a little bit expensive today.
Now a question on your business model asset. So you've always credited your tech team for Zerodha being more of a technology company than a plain vanilla stockbroker. So what are some of the tools that you provide for an investor or a trader, and how does that differentiate you from your competitors?
Well, I wouldn't say we do anything exceptionally different from what is already out there, but I think the change that we have brought in place is a system, ecosystem which was very cluttered. We have made it more user friendly, and the experience has become a lot more seamless. So, in things like this, where user experience is cardinal in a way, the tiny things make a bigger difference than the larger things. And I think we've done the tiny things well.
Coming to another question. So we have all heard that technical skills are required in the market, but psychology plays an even bigger role. So what is your take on it? Like, how does sentiments affect the investments and trading of a particular human being?
Yeah, so I feel like technical skills, if you're talking about things like technical analysis in the stock market, are based on a very simple premise that patterns that have occurred in the past will recur in the future. So you're essentially looking for cyclicality in the market and looking for patterns that, when they replicate in the future, you can take advantage of. I'm not the biggest proponent or fan of technical analysis. I think psychology and sentiment plays a larger part in driving market direction. At the end of the day, the price of a stock will go up if enough people want to buy it and less people want to sell it, and vice versa. So I would in fact say watching for sentimental parameters, watching for the psychology of market participants is as important a tool as any.
All right. And also, like as you mentioned, that Truebeacon is in a very early phase right now. What do you, how do you project the asset management industry going forward in India, and with companies like Truebeacon coming up? Do you think the model can be replicated by a lot more people, just like how Zerodha was? Like a lot more stockbrokers, discount brokers came up in the picture. So how do you feel that the asset management industry is going to be projected going ahead?
Yeah, I mean, everything is replicatable, right? I think that's a good thing. If something is working, more people should do it. So there is enough initiative and onus on people to constantly change and innovate. The more number of people like us who participate, the end product for the investor gets better constantly. So competition is a good thing, not a bad thing, especially in an industry which is as underpenetrated as anything around stock markets is in India. How will it change? I think in the last 12, 16 months, in the recent history that we have seen, a lot more people are choosing to invest directly versus using a mutual fund or a fund manager. That is the retail category. But the HNI and ultra HNI category definitely, when the ticket sizes are larger, they appreciate advice and they appreciate that somebody else is taking care of them because what they have on the line is generally higher. I think that trend will continue. I think retail will move away from active asset management, and the HNI crowd and the institutional crowd will move towards active asset management.
Especially with respect to finance. So, what do you think is the most effective way to become financially literate?
Well, shy away from looking at opinions. You have to come to terms with the fact that nobody is an astrologer and nobody can predict the future. Everybody who attempts to is essentially attempting to. So stay away from all the content which is around, people predicting the future and trying to call what will happen with the market. But stick to everything which talks about, how to analyze a company, the history of markets, what has happened, what news event, what geopolitical event changed market sentiment. Read about why a commodity is priced a certain way, what are the driving forces which move it, what is currency, what is backing which currency, what will happen in that market in the future. So stick to topics like that and shy away from people and predictions that people might have.
Right, right. So you started at the age of 17, and there are so many people at the same age bracket who would like to emulate your journey and start their own journey into trading and FD. So, what are your advices for those 17-year-olds with your experience of over 15 years today?
Well, firstly, it would be to stay in college, finish your
Mm-hmm.
education. I mean,
Right.
just because we were lucky at to be in the right time at the right place, it doesn't happen. If you were to play probability, 8 out of 10 times it might not happen. Life is long, and having that college degree and having some kind of a structure at hand will probably significantly help later in life. Outside of that, what would I say to a 17-year-old? I don't know. I mean, take it easy. Life is not all about what marks you get, what is the first job you get. I think society is evolving in a manner where back in the day, people had one profession in their life, but people
Mm-hmm.
like you will probably have four different professions because you'll do something for 10 years, get bored, and do something
Yeah.
altogether, which is in a different domain. Yeah, so take it easy, make sure you have fun, take care of your health. Don't spend all your time fretting over, what marks you get. Listen to your parents and your teachers, but remember that what they know works is from 30, 40 years ago and might not be as relevant today as it was in their time. I often say this to people. I think back in the day, we all evolved to be constantly smarter, right? Like if you guys compare a 10-year-old of today, will be smarter than you guys when he becomes your age. So if you were to take advice, rather take it from somebody who's younger than you and look at the patterns that they are choosing in their life than someone significantly older than you, because A 60-year-old might know what worked 50 years ago, but that might not be relevant when you're in the workforce 5 years from now. You will be catering to the youngster market. Yeah,
Right.
and I hope there are no teachers and parents on this, or people who are going to view this at the end of all.
A slightly open-ended question. Have there been instances where losing a queen has helped you call a checkmate?
Have there been instances where?
Losing a queen has helped you call a checkmate in any situation in life or in any
Well,
environment.
that could have so many analogies. Now, queen could be on a chessboard, queen could be on so many different places, but let
With respect to chess, yeah.
let me say that yeah, I mean there are many. So chess is all theory, right? Like if you
Yeah,
were to go back and look at games that have been played, many of the very aggressive players have been okay with sacrificing their queen. So queen is arbitrary, right? Queen equal to X amount of points on a chessboard. If you were to win three pieces and lose a queen, it's probably fair game.
yeah. Also, you have spent a lot of time reading books. So would you choose?
Sure. So, I mean, I hope I'm an avid reader. I like to think of myself as one. But so different times I read different kind of stuff. I was a
Okay,
big history buff a few years ago, so I would read a lot about what happened to the Greeks and the Nazis and all kind of different times in the past. Right now, the current trip is psychology. Last couple of years, so I
uh-huh,
read Adler, Jung, Freud. The latest guy I'm reading right now is a French philosopher called René Girard. Interesting guy. He talks about how in isolation we do not know what we want. Janvi thinks she wants what she wants because her subconscious is telling her that Dipesh and Aakansh want that too. If I were to put Janvi in a box all her life, she would want completely different things. He talks about, questioning your subconscious and trying to figure out what you really want to do, because at the end of the day, you should not be living life based on, what those four people in the benches next to you in Christ College in Kormangla want, right? But
yeah.
interesting book. You should check it out.
Oh, thank you
So
so
I
much.
think you're referring to the mimetic theory, if I'm not wrong.
Yeah, 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 yeah.
Also, so like let's come talking about rain matter also. Like it's
Mm.
your own fund.
Uh,
We have seen that you have invested in startups like FinShots, which are promoting financial literacy. So does it stay in the heart of all your ventures that financial literacy is something which you guys want to promote across the country, that every young individual growing up now should be financially literate and independent about their own finances?
yeah, I mean, it works well for us, doesn't it? More people read about finance and learn, we get more clients. So definitely, yeah. I hope a lot more people get financially literate. But from another angle, I think we spend a lot of time teaching people how to make money, like 15 years of schooling, right? But we spend very little time teaching people how to manage that money. I think that's not right, because what's the point of earning a lot of money if you were to then go to stupid investments and lose it? It's something the government has to do at a much younger age. Like, you guys should not be 20 and start learning about how to manage money. I think it should be part of middle school education and stuff like that.
So just following up on that, so basically we know that Rain Matter invests in a lot of social projects and things which are of the future. For example, let's say so something which is very environment friendly. So I mean, is that the main focus of Rain Matter, or are you as a fund more open to any opportunities that you feel are worth funding? So what's the thought process behind your investments?
So we tried investing to, get a return. We invested in a lot of companies, like maybe 30, 40 different companies, and we didn't earn any money. So we didn't make a return. So now we are taking next possible route that we're doing everything for climate change, and we're kind of fixated on that problem. But people in the office, very many colleagues of mine, and we all seem quite keen, and climate change seems to be our cause. So a lot of what Rain Matter does in the future will be around climate change, not for profit, but to be able to make some kind of a difference. I think we all recognize that we've been lucky in our lives, having caught inflection points in different cycles. So we are allocating a significant portion of that towards climate change. We still do investments in fintech and stuff like that, but we are fairly focused on fintech alone, and we look at products where A, we can bring a captive audience to that platform, and B, products which will be a good tool for our client base to have as well. So fairly specialized products kind of thing.
Also, we have had this have seen many interviews of yours and also of Nitin's, that the whole bootstrap versus funded story. Like, what's your take on it?
So I'm a conservative guy. If somebody comes to me with a business idea and says, we're losing 500 crores of money every year in running this company, but it's valued at $1 billion, I would not invest. And I think Nitin is the same. I think we're the kind of people who don't like taking any debt. We don't like having external investors on board. See, at the end of the day, it's not just about scaling a company and making it 5 times bigger or 10 times bigger, but it's also having a certain amount of peace of mind. So you're responsible towards your clientele and you do the right things, and not necessarily with a revenue or scalability target in mind. That has worked well for us, and hence we are still bootstrapped and we don't have any investors. But again, I think I might be slightly jaded by the industry I'm in. Like we spoke about earlier, uh, because 1% of the country has any exposure to equity markets. For us to go put out an ad on television, if 100 people look at the ad and only one of them is a prospective client, it doesn't really make sense in my industry. As much as it might make in e-commerce, where out of 100 people, maybe 80 of them are prospective clients for you. So some companies need to take funding, some companies need to spend money and acquire clients, but specifically for stockbroking, I don't think the use case is as much, and hence bootstrapping works in a way.
A few questions just on the economy in general. We have all seen, like in the recent weeks, that a second wave of COVID has been looming around the subcontinent as such. Um, what's your take on how the markets are going to react to it? As we saw that a couple of days early, Sensex almost fell by 1,000 points. So, what's your take? Do we see a correction because of the lockdowns now starting up in most of the states?
Yeah, so I think personally, okay, this is a very candid personal opinion. I think as a country, for us, if the after you have inoculated somebody, if the antibodies in your system last for 6 months or whatever, right? Nobody knows exactly how long. I think it's fairly hard to expect the government to be able to inoculate 130 crore people every 6 months. I think, and I have believed this from, maybe the very beginning of coronavirus, is the only solution for a disease which is as infectious as this is probably for all of us to get it, or the virus to kind of mutate into something which is not as harmful as it was when it started. I believe that it's not a very popular thing to say, because we all we all kind of overestimate our own capabilities. Akansh, who I think reads a lot of books, would have heard of the Dunning-Kruger effect. Like even as a government and not as individuals, I think we feel like it's plausible. In theory it might be, but practically for a country as large as India, it's very difficult. So if I were to make a prediction at the point where we sit today, this 1 lakh cases a day will probably continue to go up for a significant amount of time, up until a vast majority of our country, has had the virus, or the virus has naturally evolved. But that being said, certain pockets of the economy are affected. Certain pockets of the economy are doing well. Like our industry, for example, fintech has done well because of the virus in a way. If the companies which are doing well make up for companies which are not doing well, is a very hard thing to say. You talk to a lot of promoters, and some people are like ecstatic and they've had the best year ever. I was talking to somebody in the auto industry recently, and they said we have sold more bikes in the last 6 months than we've ever done in our lives. And if you talk to another industry, they would be saying the opposite. But I guess only time will tell the net effect of Corona. I think personally it'll be negative. I think it has slowed us down. It has lost a lot of time, and I think we're nowhere near the end of it. But let's wait and watch. Very hard to predict.
Coming to Zerodha as such, are you guys planning to like spread out geographically to some other countries, like expand more apart from just India?
Yeah, we would love to. We've been debating it and attempting it for a couple of years now. India has capital controls, right? So, as an Indian citizen, when you go travel abroad, like you guys might go to another country and spend money on your credit card or anything, right? Like you go shop for something. The sum total of all the money an individual can move from India outside the country is about $250,000 a year. So you can't spend more than that cap. Uh, that makes it a bit difficult for us to kind of like build products outside of India for Indians in the ultra HNI space. So, if you're talking to, say, a billionaire in India and building a product for him, this 250K will not appeal to him. And on the retail side, when you go to the person who's investing 50,000 rupees, in forex conversions, in bank charges, if you were to lose, 1-2% in, the fees you pay for that linkage between India and the West, or Southeast Asia or wherever, it doesn't make sense mathematically outside of this tiny bucket of people who want to invest 200 to $50,000 a year specifically. In that tiny bucket, it makes sense, but at the very low end and the top end, it does not. We're trying to figure out how we can cater to that problem, but yeah, definitely the intention is there.
Okay, one final question from my end. A lot of youngsters now look at you as a role model, looking at how you have scaled your businesses over the past 10, 15 years. So, what's a general idea, like what's a day in the life of Nikhil Kamath?
It's fairly boring and repetitive. Like you would be disappointed. I wake up at 7 in the morning, start work at 8:30. Markets close at 3:30, so I'm definitely occupied until then. And then I have meetings till maybe 8, 9 p.m. Then I go to the gym and then I go to bed. I try to catch up on reading or Netflix, one of the two in between whenever I can get time. Weekends, I like to sleep. So my ideal Sunday is being in bed for like, 14 hours or 15 hours. I try to achieve that. It doesn't happen very often. Once in a while it does, but when it does, I'm very proud and happy. Like life goals keep changing, like the new goals are like eat healthy, sleep for 8 hours a day. Um, the one thing Corona has taught everybody is, see, it's not like anybody can spend money right now, right? Like even if you were to have money, you can't go anywhere, you can't buy anything. You can buy a car and park it in your basement for your own pleasure, but I don't think that's the direction I want to be going in. So I think it has kind of like put you in that spot where you have to rethink life and what you want from life. To me personally, I think being healthy and kind of like being fit has become more important than it once was. So I'm trying to focus on doing that a bit more than I have traditionally done.
That's a wonderful insight.
Yeah. Alrighty. Thank
So
you.
thank you so much, sir, for your time. This was a very insightful session. We've received a lot of inspiration from this interview. So thank you so much for giving us time to, from your busy day to attend this call and give us the interview. I would also like to thank Dipesh and Aakansh for taking out time to be a part of this interview. And I thank you all and hope you have a wonderful day ahead.
Thank you, everyone. Lovely chatting with you. Cheers.
Yeah.
Thank
Thank you
you.
so
Thank
much,
you so
sir.
much.
Bye
Cheers.
bye.
Bye.